Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Remote work made it clear most meetings could have been silent nods in a group chat. Recessions are when economists start using softer fonts in their presentations. The stock market is just human emotion, charted in high definition. The left blames the right blames the left, and potholes remain bipartisan. Winning builds character, losing builds metaphors.
This chart proves Warren Buffett's favorite truth. Stocks are slaves to earnings and not GDP. India may growth the growth charts, but what really drives markets is how efficiently that growth turns into profits. Notice how the US, with slower GDP growth, still delivers higher total returns, a masterclass in capital allocation and corporate efficiency. China, on the other hand, grew fast but earned little, showing that not all growth translates into wealth. In investing, expansion is exciting, but compounding comes from discipline. China's EV battlefield isn't even close. BYD owns nearly 30% of the market, more than double its next rival, Geely. Meanwhile, Tesla is somewhere in the mid-pack, holding barely 1/6 of BYD's market share, a humbling 6th place in the world's largest auto market. What's striking is how private players like BYD and Geely are outpacing state-backed giants. The EV revolution in China isn't being driven by government factories, it's powered by entrepreneurs. Here is the US stock market in one chart. The less money you make, the more your stock soars. Companies with no revenue are up 34%, the so-called unprofitable innovators are up 18%, and good old-fashioned profitable businesses a humble 7%. It's a year when reality took a vacation and speculation threw the party. Investors aren't buying earnings anymore, they're buying dreams. Preferably ones backed by AI, quantum computing, or vibes. The Max 7 still float on narrative rocket fuel, while the rest of the market quietly wonders if profit is still fashionable. Here's a quiet miracle in India's growth story. While many emerging markets see their investment cycles come and go, India's Capex engine has been remarkably steady. For over 2 decades, gross fixed capital formation has stayed just about 30% of GDP, and that's the economy putting nearly a third of its output straight back into building factories, roads, ports, and power. The high point? A pre-global financial crisis boom at 36%. Even through COVID, policy shifts, and global rate hikes, India never truly took its foot off the pedal. That's why it stands out. Not for flashy surges, but for the consistent investment stamina. India's Capex rhythm is still thumping, but the beat's a little uneven. The centre's spending growth remains strong, staying above trend and showing no signs of fatigue. Think highways, railways, and defense bills. Delhi's wallet is still open and busy. The states, however, have eased off the accelerator. After a solid post-pandemic surge, their Capex growth is moderating, possibly due to tighter finances and election year caution. Still, both lines are pointing north, meaning the investment pipeline isn't drying up, just balancing out. The center is keeping the growth engine humming, while the states pause to catch breath before the next leg. The world's billionaires added another $1.3 trillion last year, and nearly half of that wealth sits in the US, where 1,135 billionaires now collectively hold over $5.7 trillion. China trails with a modest $1.3 trillion, followed by Germany, India, and the UK. But here's the kicker. Tech billionaires alone have seen their fortunes rocket nearly 200% since 2015. AI and markets lifted fortunes from Menlo Park to Manhattan, while the rest of the world mostly watched. Even Europe quietly hit the 1,000 billionaire mark, though it's still luxury handbags and banking profits and not quantum chips driving their rise. The AI boom isn't just devouring data, it's guzzling water and power too. Globally, data centers are set to nearly double their water withdrawals by 2030, hitting 9,400 billion liters. That's enough to fill millions of Olympic pools, mostly to keep those GPUs from melting down. India ranks amongst the heaviest daily users of ChatGPT, second only to Kenya, but few realize that each image generator burns over 500 watt hours, about the same as running your washing machine for half an hour. But it's not just electricity. AI's carbon footprint is ballooning too. By 2035, emissions from data centers could rival those of mid-sized industrial nations. If India's liquor sales were a cricket league, the South would be sweeping the tournament. Karnataka tops the chart with nearly 7 crore cases of Indian-made foreign liquor, followed closely by Tamil Nadu, together cornering a third of India's booze market. Telangana and Andhra Pradesh make up the next round, showing that Deccan spirits remain high, literally. Maharashtra follows, while the northern giants Uttar Pradesh and Delhi barely make the scoreboard. What's interesting? Kerala, despite its population size, drinks more than West Bengal and Rajasthan combined.